Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I was looking through my portfolio and trying to figure out what companies I should be adding to in this situation where stocks have come down quite a bit. I've got 26 different companies in this portfolio, and I'm currently looking at saying, okay, where is the quality in this portfolio, what companies are down at the moment, what companies are attractive in terms of valuation side of things, growth side of things, and I have done a little bit of a rebalancing over the last 3 weeks. I think about 2.5 weeks ago I did some sales, and which I will be sharing with you guys inshallah in the next couple of days. I'm going to do a full portfolio. As you can see right now here, that's basically where the portfolio is, just up over 1% up, so 1,500. I don't know if you remember, if you watch any of the videos, in December or so on, we were up about £11,000 or whatever it is. And since then, of course, we've taken a massive hit. 11th of February was the time where the portfolio hit all-time highs, and that was £124,000. Since then, I've added actually quite a bit of money, and we are only £111,000. Alhamdulillah. To be fair, one of the things that has happened is because of the terrorism and all of that stuff, and one of the things that I'm doing is just buying high quality businesses that have basically, there are three different sections, if you like, of my portfolio, three segments, if you like. You've got growth that pays dividends, but still growth companies. You've got dividend growth companies that are attractive enough, that are paying a decent dividend, but at the same time still growing their revenues. They still they're not really mature companies. They're still growing. And we have mature companies that are only dividend play, sort of the Rio Tintos and and Canadian National Resources, and those type of companies that are in the portfolio for the income reason. So there is a strategy behind the whole thing, and I will share that with you guys. But so what I'm doing now is basically I'm started adding my £250 a week. I want to try max my ISA account. I will talk about that in the next video, inshallah, when we talk about the entire portfolio. And what I'm doing now is just looking at the portfolio and seeing where basically what companies are attractive right now. And there's a company that I've been doing research over the last basically couple of days just to see where they are now, and I just want to share with the community. So this is what I normally tend to do, because I own the company already, so I just want to talk about it today in this video. Just kind of share with you guys basically where my head is at with this company, and then tell you whether I'm going to buy more, sell, or hold on to what I have. But before we talk about it, as always, these things go up and down, the fee and greed, the extreme greed, or the basic extreme fees and all of that stuff. Again, don't let this intro basically change your mind. This can go basically zero today, and then it can come back tomorrow to fear, basically extreme greed and so on. All that depends on whether the orange man basically tweets something or whatever. So don't worry too much about these things. Again, if you're a long-term investor, you wouldn't really worry about. And the reason I say this, by the way, I'm not just having a go on Donald Trump or anything like that. He can come out and say whatever. That's his country. But the thing is, as a longer-term investors, what is it that you're after? Are you after, basically, holding these companies for the next 10, 15 years, or are you after just quick money? If it is buy and sell right now, then of course this is going to be really painful for you. But if you are basically buying high-quality businesses and holding them basically for the next 10 to 15, 20 years, then you don't have to worry about it, because I promise you, 5 years down the line, we're going to look back, okay, and we will forget this situation that ever happened. Exactly the same thing we did with COVID. March of 2020, the stock market went down 30% in a few days, right? Do you remember that? Yeah. And what happened? We made a lot of money since then. Okay, some people lost, some people made it. That's how the game works. Now, as you can see here, the S&P 500 is down about 7%. The Dow Jones is down about almost 7%. The Nasdaq by 11%. The FTSE 100 is up about almost 2%, which is quite nice. So, like I've always said to you guys, these things will go up and down. But the last 5 years, when you check the last 5 years, you can see the S&P 500 is about 93%. So, over a period of time, these things do go up. The company I want to talk about today is Qualcomm. Okay, I'm just going to give you guys an overview what the company does first of all. Then we're going to look at basically some of the metrics, some of the dividend side of things. Then we'll look at the income statements and things like that, the financials behind this company, if they have so much debt, all of that stuff. And then at the end, we're going to look at the valuations, and I'll tell you exactly what my buying price is, what I will be doing moving forward, inshallah. So that is the plan. As you can see here, for example, a year to date, it's only down about 5%. The S&P 500, you've seen it just basically right now. If you look at for the year to date, we're saying it's about 7% down. But this one is only down about 4%, which is not bad at all. For the 1 year, it's down about 10%. For the last 5 years, it's about 93%. So if you bought it basically 5 years ago and so on, you'll probably be up about 93% or so on. Last 10 years, 114%. That's just based on price. And as you can see, the 52-week range, the lowest and lower end basically was $120 per share. Right now it's $146 per share. Now the company pays dividends, okay, so 2.4. So one of the best technology companies out there that pays dividends. But before we look at that, let me just talk about how they actually make money, right? The Qualcomm, this was the fiscal year Q1 fiscal 2025, and as you can see here, $7.6 billion of that revenue came from the handset side of things. They've got automotive, Internet of Things. These are the three basically sections that they report, or the two main sections, QCT and QTL. Okay, one is technologies, one technology licensing. The licensing part is really interesting one. For me, I think I would hope this company grows the licensing part, and I think that sooner or later they will have to, Morningstar will have to change their ratings for this company from narrow mode to wide mode because of that licensing. Because a lot of companies use the technology license from this company, they pay royalties and so on to use that to develop their own chips and so on. And as you can see, QCT basically was up about 20% year over year, 32% margin. The revenue was 11.7 basically in total wise, gross profit of $6.5 billion, operating profit of 3.5, okay, and the net profit of $2.9 billion, which is absolutely amazing. Of course, the company pays for also taxes and so on, but these are the three sections. And the handset has actually become a massive part now, because you can see here 7.6 billion in comparison to 1 billion and 1.5 billion dollars. So they've got the Snapdragon basically chip that goes into a lot of these Samsungs and all of these devices, and that is basically, that section is still growing. So will be interesting to see how that goes for the next few years. So that's just a quick snapshot of basically how the company makes money, but I would promise you, you wouldn't need to go away and do a little bit more digging about each section and what it entails and who the main customers are and so on, and yeah, basically how it will affect if the tariffs and all of that continue the way they are. So the dividend right now is 2.4, 80% safety, which is one of the highest. It seems undervalued at the moment. Credit rating is basically A, which is basically strong, which is nice to see. 162 billion market cap. Now looking at the dividend payout ratio, so the payout ratio is only 31%. It's important the company has a lower payout ratio, because the lower the better for us, because then that means they can increase it. If the company has a higher payout ratio, then we're in trouble. This company has increased that dividend for 21 years. That means another 4 years they will become a dividend aristocrat, and I think this is where the company is heading in the next few years. So they have been paying this dividend for increasing that dividend for a very long time, which is quite nice to see. The latest increase was just about shy of 5%, and the 5-year growth rate about 6%. Normally I'm looking for companies that grow their dividends over 5 period, basically 5 years or so, about 6%, 7%. That's what I'm looking for. For the last 10 years is about 8%, which is quite nice to see as well. Now in terms of what you get $3.56 for every share of this company that you own, which is quite nice. And right now, like I said, it seems undervalued. When this line here is inside this blue line, then that means basically it's fairly valued. But right now it's under, which means it's undervalued. Over, that means overvalued. So kind of quick rough to see what it is. But the most important thing is the 5-year average for the dividends is 2.1. The currently is 2.4. That tells us maybe this stock is basically undervalued at the moment. Okay. Now looking at the payout ratio, we've already seen is to 31%. So there's room to grow that dividends if they needed to. Free cash flow basically also covers the current dividend basically. So that's the percentage of free cash flow paid as a dividend. So that's exactly what we're looking for. We want to make sure the company has enough free cash flow they can use. If this was almost, I don't know, 80% and 90% or whatever, I would be worried, because the free cash flow does not cover dividends. Where is that money going to come from? Are they going to go to the bank and borrow the money? Are they going to get into debt and so on? So the fact that it's 30 is actually not bad at all. It's absolutely amazing. Earnings per share. One of the things that you need to understand from basically about the semiconductor companies is the fact that they are very cyclical businesses. That means 1 year they might be up, the next year they might be down. So by nature, that's how they are, a lot of these companies that are semiconductors. If you have been with me for the last 5 years, you will notice that this company, at one point they were expecting the earnings to decline, at one point they was expecting the earnings to grow fast, so it kind of balances out over a period of time. But you can see here how this choppy basic graph is, and that's basically what's been happening to the company over the last whatever years, and that's quite normal for. Okay, shares outstanding, they are buying back their own shares, which is quite nice, but the last 3 years they haven't done it. So hopefully the next couple of years they will start buying back their own shares, which will be nice, because one of the ways the companies gives you something back to the shareholders is buying back their own shares, because that one share that you own now, if they buy it back, so a lot of their shares, is now worth more, which is very important to us, right? And then also you get the dividends and all of that stuff, which is quite good. Total sales, again, as you can see here, some years we're up, some years we're down, but overall over a period of time we head in the right direction, which is basically all you want to see. Return on equity, we're looking at about 42%, which is very high. Return on invested capital of 21%, again, very good. Operating margin of 27%, and free cash flow margin of 32%, which is really good. Now when it comes to debt side of things, it's almost non-existent, which is really nice to see. So you got a company that is basically fundamentally solid business. So what we now need to look at is just a couple of more things for using basically seeking alpha. And I want to start with income statement. So this is the revenue. This is how much they spent to basically make that revenue, and then this is what's left over. So that's the gross profit, and we've already seen the percentage was, but as you can see here, from basically $25 billion to right now $40 billion in the last 10 years, which is basically what you want to see, growing revenue or year after year. And top of that, you've got the growing basically gross profit margin, which is nice as well. Now the company, of course, pays for all of these things. They pay sales and generals, research and development, and so on. And then the left over, okay, which is what we're after, is basically this net income of $10 billion, which is really nice to see. As you can see here, basic EPS has also been growing from $3 to now $9, which we have already seen. Now I just want to check one more thing with regards to this, and that is the total current assets, okay, against total current liability. So $26 billion of current assets. What we want to see now is the total current liabilities of basically just $10 billion. Okay, so that covers a lot of it. So it's about $16 billion difference, which is quite nice to see. Total liabilities is only $28 billion, and the total assets is $55 billion. So that is also covered. So nothing to worry about on this side of things. Now, what I'm going to show you now is the valuation side of things using FastGraph. FastGraph is a software that I have been using. I have no affiliation, but I really like what they do here, and I'll just explain to you guys. We're on max right now. Since 2005 we're looking at this graph. This basically gold line is the dividends that company has been paying, which shows us is being consistent. As you can see here, the fair value for this company has been 15, which is this orange line here, and normally what we expect is the price to follow that line. Okay, but sometimes the market is a bit crazy and it values the stock, this little top line there, which is the normal PE for this company, what the Mr. Market basically likes to value at this company. So if we put the price in, more or less the best time to buy this company is when basically this price line is below that orange line here, basically the fair value. And it right now is one of those situations. As you can see here, okay, there's a few times this company has been below that, and there's been times where in June 2024, where things were absolutely crazy, and if you bought it there right now, you would be down 46%. Okay, so about that sort of thing. Now, the other thing I want to show you guys is the fact that these lines here, the dotted lines, is the next 3 basically years. So this is 2025, this is 2026, and this is 2027. So this is more or less estimates, okay? And if the estimates happen, and we are right now here, okay, if I can click that, you would be basically from where we are now to what we expected the earnings to be and so on in the next basically 3 years, you would have about 11% total return, basically total annualized rate of return, which means every single year will be making about 11%. Now, if I just reduce this time to just 10 years, okay, by the way, let's go back to here, okay, so you can see the earnings growth rate was about 11%. Now, for the last 10 years, it's about 11%. For the last 5 years, it's been negative. So there's been times where this has been negative. Okay, so that's why basically you need to be careful with this type of companies. Now, and you can see basically the change to the fair value is still the same, and basically the normal PE for that period of time is about 12, which is slightly below that. Now, if we then let's click the forecast, because I want to see basically what where this company is heading. If the normal fair value PE has been about 15, and we are right now here, we would expect, if you buy this stock right now, you put $10,000 into base work right now, you will be making about another $3,000 on the top of that in the next 3 years. So you will be getting total annualized rate of return of about 11.5%, which is quite nice, or total of 30%. So your dividends will be about $585 and so on. Now, that's really good. Now, if we look at normal PE, if we use basically what the market has basically traded this company for the last whatever years in terms of a normal PE from the stock market, then you can see it's been about 16.62. That's here. And that means we will be making extra maybe about 3% or so. So about 16%. Total annualized rate of return will be about 16. So either way, you are actually basically making more. This company seems undervalued. Now, what I want to do is I want to show you the performance for this company for the last 10 years. Okay, this includes basically to give you the total return. If we invested £10,000 right now in this company, okay, basically 10 years ago, and this is despite the S&P 500. The S&P 500 would have given you that period of time from basically for the last 10 years, okay, you would have made about 11% in terms of annualized rate of return without dividends. With the dividends, about 11.6. With this company, compounded basically growth will be almost 17%. Which is absolutely amazing to see, right? So your 10,000 would be right now 32,400 basically, and so on. Whereas basically the S&P 500 will have given you 23,000. So it's really important that you buy in high quality businesses and holding them for a very long time, and buy them when they are cheap, not when they are expensive. Not when, if you bought it here, you will be losing right now about 3%. Which is not bad, but there's been times where it's been trading a lot higher than that. So you just need to be careful when you're buying these companies. Now, that leads me to the final thing, which is basically Morningstar valuation, which is $180 per share. Right now is $147 per share. So again, basically it seems undervalued according to this. According to Fast Graph is also seems undervalued. If we go to Morningstar, Seeking Alpha Wall Street, as you can see here, we've got 13 stroke buys. 5 buys, 17 hold, and right now it's about 29% upside from where we are. 190 is where they expect to be, the price to be, and again it's more or less similar to basically 180. So overall, what's my target? What is my plan for this company? I own 30 shares. Right now I'm up about 13%. My basically price right now, the average is $125 per share. Basically, if it comes back down to $125 per share, I will be buying more. And funny enough, this company is probably one of the oldest companies that I've had in this portfolio, and I will show you that in a second. If I go down all the way to, see, there you go, August 2020 is when I bought my first share of this company. Since then, I've been buying every single month. The only time I've trimmed was when it was so expensive. I think it was June of last year. I'll find it in a second. Okay, these are all dividends, but that's the sale. So I sold 10 shares. I made $1,600 per pound, sorry, and about $628, basically 68 pounds is basically how much profit I've made on the top of what I've actually invested. Now, that time it was trading over $200 basically dollars per share, and I felt it was very much overvalued. So I took that money off the table and put it into another company and invested in something else I can't remember now. But that is the kind of thing that you should be doing as a long-term investor, and not worrying about basically the fluctuations of prices and what might happen today or tomorrow. Anyway, that's what I wanted to share with you guys. I've got a few more videos like this, inshallah. If you enjoy this type of content and you still here, like the video, subscribe to the channel. And the most important thing for me is that it takes a lot of time and effort to put these videos together. So if you can just like it, perfect. And also join the Discord, free Discord right now. It's no longer paid or whatever, behind paid wall, whatever. So join the Discord. The link is downstairs, basically on the description section. And yeah, and if you can join us at the Patreon account, that will also help the channel. Have a wonderful day. Assalamu Alaikum.